HPQ's second quarter 2026 earnings call summary. Good afternoon, everyone. This is a summary of HP Incorporated's second quarter 2026 earnings conference call. The call featured insights from interim CEO Broussard and CFO Karen L. Parkhill. Financial highlights and performance. Revenue. HP Incorporation reported 9% year-over-year revenue growth, marking the 8th consecutive quarter of top-line expansion. This was primarily driven by strong performance in personal systems. Earnings per share, EPS. Diluted EPS came in at 86 cents, representing a year-over-year increase of over 20%, exceeding the company's guidance. Gross margin. The company achieved a gross margin of 20.9%, up year-over-year, thanks to favorable pricing and contributions from growth areas, partially offset by higher commodity costs and a shift in product mix within personal systems. Operating margin. Operating margin was 7.5%, a 20 basis point improvement year-over-year. Cash flow. HP generated over $900 million in cash from operations and approximately $800 million in free cash flow, both above expectations. Segment performance. Personal systems. This segment was a key driver of growth, with revenue up 13% year-over-year. Both commercial and consumer sectors showed strong performance. A significant highlight was the continued momentum in AI PCs, which increased to 44% of the shipment mix from over 35% in the previous quarter. Advanced compute and workforce solutions also delivered double-digit growth. Operating profit for personal systems grew 30% year-over-year, with operating margins at 5.2%. Print revenue was flat year-over-year, as anticipated in a competitive market. The company maintained pricing discipline and focused on profitable unit placements. Industrial graphics continued its growth trajectory, and 3D printing saw double-digit growth for the 5th consecutive quarter. Consumer revenue declined 10%, but the company saw double-digit unit growth in tank printers. Commercial revenue remained flat, with higher average selling prices, ASPs, offsetting lower volumes. Supplies revenue was flat year-over-year in constant currency, driven by pricing and market share gains. Management's forecasts and outlook. Full-year EPS. HP is strengthening its outlook, now expecting diluted net EPS to be in the range of $2.90 to $3.10. Third quarter EPS. For Q3, diluted net EPS is projected to be between 61 cents and 71 cents. Full-year free cash flow. The company expects annual free cash flow to be solidly in the range of $2.8 billion to $3 billion. Personal systems outlook. The company expects below-seasonal revenue performance in Q3 due to demand pull forward from earlier in the year. Input costs are expected to continue rising in the second half of fiscal 2026, leading to personal systems operating margins remaining below the long-term range for the remainder of the year. Q4 is anticipated to be a low point for personal systems margins, with sequential improvement expected thereafter. Print outlook. For Q3, print revenue is expected to be in line with normal seasonality, with operating margins near the lower end of the long-term range. Full-year print operating margins are expected to be solidly within the range. Significant risk factors. Input cost pressures. The company anticipates continued increases in memory and storage costs, as well as broader inflationary pressures, including oil prices, in the second half of fiscal 2026. Challenging supply and cost environment. HP continues to navigate these complexities. PC market demand. Industry experts project a decline in the PC unit TAM in the high teens for the second half of the calendar year, influenced by a rising price environment and some demand pull forward. Key highlights. AI innovation and strategy. HP is positioning itself as a trusted intelligent edge provider, enabling AI workloads at the edge due to rising cloud costs and privacy concerns. The company is enhancing its portfolio with AI-enabled solutions across workstations, printing, and its broader device ecosystem. Strong personal systems performance. The robust growth in personal systems, particularly driven by AI PCs and premium categories, was a significant positive. Disciplined execution. Management emphasized prudent execution, cost actions, and disciplined pricing as key to navigating cost pressures and delivering results above guidance. CEO's search. The board is actively engaged in a comprehensive search for a new CEO, seeking a leader with a proven track record, ability to operate in complex environments, and global business experience. Cost savings initiative. HP remains on track to generate $1 billion in gross annualized run rate savings by the end of fiscal year 2028. Lowlights. Print margin pressure. Print operating margins were down year-over-year in Q2, primarily due to higher trade-related costs and promotional investments, particularly in big tanks. Q3 margins are expected to be near the lower end of the long-term range due to seasonality and cost pressures. Consumer print decline. Consumer print revenue experienced a 10% year-over-year decline. PC margin outlook. Personal systems operating margins are expected to remain below the long-term range for the remainder of fiscal 2026 due to rising input costs. Most important statements from management. Broussard, interim CEO on AI and the future of work. AI innovation is accelerating, and adoption is growing rapidly across enterprises. Customers are becoming more thoughtful about where AI workflows run. Companies like HP that own the trusted edge, the workflow context, and the orchestration layer between local and cloud intelligence will be positioned to thrive in this environment. On Q2 performance. Our second quarter performance underscores both the resilience of the business today and the opportunities we see ahead. We delivered against those commitments in Q2. Revenue grew 9% year-over-year, marking the 8th consecutive quarter of top-line growth, led by strong personal systems performance. On innovation. We unveiled a wave of innovation across our portfolio. Our devices and software stack support this shift with strong architectural capabilities for edge inferencing and new AI workloads. We are becoming the trusted intelligent edge provider. On the CEO's search. We are looking for a leader with a proven track record of creating long-term value for customers and shareholders. Second, the ability to operate effectively in complex and rapidly changing environments. Lastly, global and multi-segment business experience. Karen L. Parkhill, CFO on Q2 results. We delivered solid top-line growth driven by continued strength in personal systems and momentum in our key growth areas. And through disciplined execution and an emphasis on what we can control, we also delivered EPS above our guidance range. On mitigation strategies. Our results reflect the progress we have made on executing to the playbook we laid out at the beginning of the year to mitigate higher input costs. Together, these actions had a meaningful impact on our operating profit in the quarter, enabling us to deliver results above expectations. On the outlook. As we look ahead, we expect rising input costs to put increasing pressure on our operating margins, particularly in personal systems. So we are taking a prudent approach to our outlook. That said, we have a strong track record of navigating near-term headwinds, and we will remain focused on building on our Q2 momentum. On full-year guidance. With 2 solid quarters behind us, we are strengthening our outlook for the fiscal year. We are now more confident in our ability to deliver higher EPS this fiscal year. As such, we now expect diluted net earnings per share to be in the range of $2.90 to $3.10. In summary, HP Incorporation delivered a solid second quarter of fiscal 2026, characterized by strong revenue growth exceeding EPS guidance, and robust performance in personal systems, especially with the increasing adoption of AI PCs. While facing input cost pressures and a dynamic market, the company is executing well on its mitigation strategies and remains optimistic about its future of work strategy, particularly as AI continues to move to the edge. The company is also progressing with its CEO search,